Hey traders, welcome back to the FX YouTube channel. As I mentioned in the public chat, I said I would do a quick video as my scale in just hit its second profit target. So let me start with a little background of this trade. If you watched any of my videos this week, you know that I've been extremely bearish on EU and was expecting a big move. Well, that move started yesterday and I essentially missed that trade. But I was able to get in to this trade last night on the flip zone that is still in play. But what I wanted to talk about for this video is a scale in trade that I took today. But before I get into that trade, I want to make it clear that almost every member of Black Swan enters trades with 1 to 3 pip stop losses. I am the clear exception to this rule. And with my new trading strategy, it goes well beyond that. And now onto the trade. Now the reason why I wanted to talk about this trade is because I added another trade entry in my trading plan. After I missed a trade yesterday, mainly because of stupidity, I was so damn frustrated that I was thinking to myself and discussing with some of my Black Swan bros, how in the heck could I get in a trade that only had one decent entry that I missed and no pullbacks after for re-entry? It became obvious the only way I could enter such trades is to trust my higher time frame bias and take a risk entry to get in. But you may be asking yourself, if I took such a risk trade, how in the heck can I ensure that I don't get immediately stopped out? So for that, I decided if I am trying to get into a higher time frame trade, I could do a few things to ensure that the trade goes as planned. First, use stops instead of limits or manual execution. This ensures that at the very least, the trade has to go through your entry before it moves in your direction. Second, use wider stop losses, because if you're trading purely on structure and your bias, why enter a small stop loss and take the risk of getting stopped out before the trade moves in your direction? And third, enter with higher risk. I mean, if you're going to be entering with a wider stop loss, you may as well increase your risk to make the trade worthwhile, right? So anyways, that was my plan. The basis of my new trading strategy that I added to my trading plan. So although this was a test without crazy risks on my funded accounts, it was enough to make the move very noticeable. So after my first TP and partial, just to give an idea, I took 1% off and just made another 0.5% on this particular trade after it hit my second TP. So all in all, I've made over 2.5% between these two trades. And the first trade was very low risk. In terms of the setup, there wasn't anything really clear in terms of the entry for this particular trade. And the only reason I was able to get into it was because I took a risk entry with this new strategy. So what I was seeing on the charts, let me just draw for you really quickly. So you can see my first entry is here. So this was actually at the flip zone. So after the price came into the flip zone, it had an immediate reaction down, breaking the lower time frame demand, and then after that pulling back up into supply, and then thereafter pushing down. So this trade was fine, and it's been safe. It almost got stopped out here, but it never hit my break even and eventually pushed down with another pullback here, but never came close. Well, it came close to my break even, but it never took me out of the trade. But for this particular trade, this new trade in my trading arsenal, so what I was seeing in the charts when I was looking to take this trade, so you could see that price created a lower time frame trough here, pushed down, correctively pushed back up, came back into supply. So supply held, and thereafter pushed down again, creating a lower time frame chalk. And thereafter, it had an initial pullback. I didn't enter here, but what I was watching for was a reaction after. And what happened? It came down, broke the lows again, and then pulled back, liquidating the previous high, coming to the extreme. And thereafter, I just set a stop, sell stop, and let the trade go. There was one thing I should probably add. There was something that happened that I was very concerned with, this particular risk entry, and that's here. So as you can see, on the second push down, it actually reacted off demand. And in most cases, you don't want to enter a short when the price reacts off demand. And the reason why, the price can very easily react off supply, maybe come a little higher, react off supply, and just shoot to the moon. But fortunately, in my case, I was basing the scenario on higher time frame structure, higher time frame intention. I was expecting the price to come down. So I took the trade anyways, and you can see the result after. Price came down. It did come back up. I didn't have my break even set at this time, but fortunately, it pushed right down after. After it broke this low, I set my break even. And then, I mean, that was all she wrote. The price just continued to melt down after broke this low. And then after that, I felt the trade was quite safe. Came back, tested the flip zone, and then pushed back down. And it came all the way back down to the, it didn't actually tap it yet, but it came very, very near to the 4-hour demand zone that I was expecting to be targeted. So this was the first target that I spoke about, even on my weekend analysis, if you check my video on Sunday. So my TP got hit on the initial push down. My expectation is, yeah, price will eventually come down further. But after that, I mean, who knows what could happen. I mean, if we look at the higher time frame, I mean, now that we came into this demand, broke a significant amount of lows. Go back to my pen. So here, here, and here, that could be used as liquidity and inducement. Potentially, we could see a short-term reversal at this point. But ultimately, this was my first target that I was expecting to be hit. The price could do this. It could also react off it and then come back down and target the monthly, weekly, yearly, monthly, weekly lows. But as far as I'm concerned, I mean, this is a big target for me because that was the one that I was wanting to see hit the most. Whether it comes down here or not, I mean, that's a big question mark. But I was discussing with one of the Black Swan members today, and we were talking about the potential ECB interest rate hikes. Potentially, there was talks about that happening at the end of July. Potentially, I think it was the 21st or the 23rd of July, which is a long ways away. It's still 3 or 4 weeks. And if those interest rate hikes don't happen for another 3 or 4 weeks, I mean, the likelihood that we continue down and break those lows is very high. But if, for example, next week, that's a completely different story. If the ECB says we're going to increase the interest rates from next week, then potentially this demand may hold. That news comes out, and suddenly EU just starts to moon. So yes, this was a very risky trade without clear confirmation. But like I said, as supply was holding, the trade idea was consistent with the higher time frame structure. I took it anyways. So once my sell stop was set, slightly below the current price, the price played around a little for a few seconds, and then went through my entry, tapping me in, and then just pushed down from there. But the most important thing, I mean, as you can see from the result, first, I didn't miss the trade, and secondly, I got into another significant move. So I missed the first one, but I got into this one. And yeah, you can argue that the price could have tapped me out and gone against me, but with a clear understanding of structure and just understanding the expectation of where price is going, I was willing to take that risk. And entering with a wider stop loss, I had some buffer, but more importantly, would you rather take a loss or miss a trade like this? For me, at least, I would prefer to take a loss than to miss a significant move like this, and you can clearly see it paid off. At least, at the very least, it would alleviate any post-FOMO anxiety after a move like yesterday that you completely missed. And like I said, it was how many videos? 5 YouTube videos that I produced saying that price is going down, and I miss a move. I mean, just think of the emotions that are going through my head when the price starts pushing down like that. After 5 videos saying EU's gonna break to the downside, and miss a trade. But in the end, my 20% was around here, I believe. I think it was just above this demand zone. And then I took a partial, a manual partial, I believe around this area. So once the price pushed up, it came back down. I took my manual partial somewhere around here. So I took 50% off the trade, giving me a total of 1% on this trade. And then when this partial hit between the two trades, I was up about 2.5%. So anyways, that's a full explanation of the trade I took today and my new trading strategy that I'll probably incorporate from now on with higher time frame intention moves. Definitely nothing fancy nor technical with this trade, but I wanted to share it anyways, as first it was a new trading strategy that I came up with yesterday that I implemented in my trading plan today, as well as the fact that it played out, I mean, exactly as expected. So thanks for watching. If you have any questions or comments, please leave a comment below. And if you found value in this video, please like the video and leave a comment. I'll see you guys for London analysis tomorrow. Peace.